Hi, everybody. My name's Nicole Flora. I'm the Executive Director of the Lake County Economic Development Corporation. Thank you for being here this evening. Just as a little reminder, we do have some snacks and bottled water back here, and if you need to use the restroom, you can enter either that door, and they're back in the back corner. You're welcome to get up and use it at any time. Again, thank you for being here. We're really excited to have this event. Where is Andy Lucas? There he is. Andy and I have been sort of brainstorming and figuring out how to make an event like this happen for quite a while. Andy is with the Community Development Services. He is the underwriter for the Lake County Economic Development Corporation's loan portfolio, but he's also the man that does all things with the jurisdictions here in Lake County for small business lending and helps us all sort of figure out the best mix of lending options for businesses here on this side of the lake, but all the way around the lake in Lake County and outside of the Lake County. Now he's working with many other counties as well. So this event, along with the event that happened a couple of weeks ago, has been sort of brewing in our heads for a while, trying to bring together all sorts of lenders, partners, and small businesses to learn how to access capital for our businesses to grow and survive through every single different cycle, from startups to growth, even to succession planning. So with that, I'm going to go ahead and pass this over to Andy, and he's going to do a quick introduction for our keynote.
Let me adjust these eyeglasses here. Thank you, everybody, for being here. My name is Andy Lucas. As Nicole said, I'm with Community Development Services. We do economic development work throughout the North State and Lake County's home. So we work with the Lake County Economic Development Corporation and Small Business Development Center. Want to say thank you to them for helping to facilitate this and their board. Tonight we have a very special guest, Scott Rogalski. He's with the NorCal SBDC Finance Center, and he's a seasoned business finance professional with nearly 20 years of experience helping businesses start, fundraise, grow, and secure essential capital. In 2012, he founded a nonprofit to connect small businesses with educational and financial resources. And in 2015, he launched a consulting business to advance strategic funding projects with the state of California, Small Business Administration, Small Business Development Centers, and Chambers of Commerce. The last 5 years as the Deputy Director for NorCal SBDC, Scott has been setting a new standard for how to develop strategic partnerships, business economic development, and forward-thinking programs for entrepreneurs and expanding businesses. Scott's going to talk a little bit about the current commercial landscape for lending and some key opportunities for small businesses and securing financing. Scott, thank you so much for being here. We really appreciate it. And then we'll have time for a panel discussion as well as some networking. Scott, thank you.
Thank you very much, Andy. And thanks to Nicole and BMO for putting this together. Do I need this? I do? Okay, cool. Yeah. Well, welcome. Good evening, everybody. Scott Rogalski, Northern California SBDC, Small Business Development Centers. How many are you familiar with SBDC? A couple of you, okay. So you can get with Nicole and sign up, and we can work with you at no cost. And all right, just say it. It's on. I get it. There you go. All right, cool. All right, I'm going to talk for about 25 minutes or so, and then we'll get into a panel of lending experts. This is for you. It's not for me. It would be good to know who we have in the audience today. So how many of you are starting a business? Nobody. No brace holes. All right. How many of you are existing business owners? And how many of you want money? Yeah. All right, cool. Stuff. Even the guys in the back. All right, cool. So yeah, we're just gonna. It's not a lot of time. So, and again, I'm here for you. The lenders are here for you. So we're just gonna talk about the business lending, the loan options that are available to you as small businesses. It's good to know that none of you are starting a business, since starting a business financing is impossible. So that's good to know that you're all existing business owners. I'm just kidding. There's a lot of great loans out there for startups. How to qualify for a business loan, and then a couple of case studies. And then if you want, we could talk through a case study of real life of somebody here. All right, so business lending options. I'll figure this thing out. All right, cool. So the lending landscape that exists out there for businesses that are in business. How many of you are in business over 2 years? And 5 years, over 5 years, over 10 years, over 20 years? Cool. Wow, that's awesome. Lots of experience. Okay. So if you're looking for capital, most of you are probably not looking for angel or venture capitalists type funding, but if you are and it's in the tech space, it's about a 1 to 2% chance of getting that type of financing. Big banks, it's about 1 out of every 4, so they just throw a bunch of stuff against the wall and see what sticks. Small community banks or credit unions, a little bit higher. And then if you want money today, you can get it today. It's probably from a fintech lender, a financial technology lender, a lender that doesn't exist except for online, and they're non-regulated, so they can fund you today, but they'll probably charge you like 200%. So I don't recommend you get any of that financing. I recommend you get the financing that's in the room today. But those are the percentages of actually getting the capital when you apply for it. All right, so the current rates as of the end of May. This is for SBA. So for those of you that are trying to get like a working capital loan, which is an overused term for just money that you're going to fund, like operating capital, whatever it takes to run and operate your business, like utilities and payroll and inventory, possibly materials, stuff like that. It'll be SBA 7A lending. This right here is for if you're looking for. So this right here, 504 is commercial real estate financing. So you'll hear about a couple of lenders on here. So if you're looking to buy a building, these are the current rates on the SBA side. It's a blended rate, which you'll learn a little bit about on the panel. And then the 10-year Treasury, as of that date, I should have updated it. I apologize. It was right around a little over 4.25. And then the prime rate is 7.5. And then the conventional rates. So these rates are all set. Well, a couple of them are set by the Treasury and the Feds. The conventional is internal per bank, but the rate depends on a couple different factors. All right, so if some of you are looking to, for some reason you can't get a bank loan or a commercial financing loan for whatever reason, whether it be credit or collateral, or they just don't like your industry, you could do a bunch of alternative forms of capital. Is there anybody in the room that sells business to business or business to government? None of you. All of you sell B2C, business to consumer? All right, cool. Then you don't have to worry about any of the accounts receivable or financing over here. But if you don't have a lot of cash flow, there's collateral-based loans. If you don't have a lot of collateral, there's cash flow-based loans out there. Here's some current statewide lenders or funders, and this is a couple of these lenders on here we have on the panel, so you'll learn about them. But the reason why I talk about them is because they're statewide. It's just easier to talk about the lenders that are statewide and the lending types that they offer. That way, regardless of where the business owner is, we can help them and place capital. If you do want to potentially find some hidden invisible grants, you can go to norcalspdc.org/Fundica, and you can type in your zip code and your industry, and you might be able to find some innovation grants if you're in that industry, or manufacturing grants if you're in that industry, or if you're looking to sell. Anybody looking to sell abroad to any other country? No? All right, cool. There's a lot of great options that may be specific to your zip code around tax credits and incentives and grants and stuff like that. But most of what you see on here is traditional financing, which is what you're probably going to be able to access. Feel free to ask any questions. I feel that there's really money out there for everyone, depending on what you're looking for and what type of industry you're in, And but you guys are all existing business owners, so a lot of these are for startups, but there are some great SBA 7A, not that you care what the code is, but called Community Advantage Lending. So you can get funding up to $350,000 without any collateral. You don't have to give up your house or your kids or anything like that. You can get up to $350,000. It's an SBA 7A. It's a 10-year loan, and it's pretty simple to get with projections and your financials and whatnot. And we can kind of help you walk through that if that's something you're looking for. But as far as you guys, since you guys already started, you can't really do a 401k injection and do a C corp, but there's lots of financing out there, crowdfunding. But most of the financing that you're probably going to get is probably going to be 10-year or maybe 5-7 year with some of the micro lenders in the room today. Is around, and then on the financing side, SBA is federal. There's federal guarantee loans, and then in the state of California, there's also state guarantee lender programs. So any of you run a nonprofit? Oh, there you go. Boom. All right, got a taker. All right, finally, first hand. So Cincinnati. Okay, well you can get money from the state of California over there in the back row. Okay, but on the for-profit side, it's probably just going to be like an SBA 7A or a micro lender or something like that for most of the financing. Anybody looking to buy a building? Oh, awesome. We got some takers. Okay, like 4 of you. Cool. Well, then I'll let the lenders talk more about that. But and depending on what type of building you're trying to buy and the use of what you're trying to buy and how much money you want to put down, you can get into a building as low as 10% down, and then some special use cases and stuff like that, you may have to put 20 or 30% down. But for the most part, you could buy a building with 10% down, and I'll let the lenders talk about that. They get excited about building loans. All right. Okay, cool. So that was like the lending options that exist. This is like how to qualify for a loan. So there's plenty of loan options out there. I would assume that everyone in this room could actually qualify for business lending because we have experts in the room that can help you walk through the process and help you apply and essentially set you up for success so that when you do apply, you will get funded instead of just like taking a guess at what's going to happen. But as far as qualifying for a loan, this is what my business coach taught me when I went through the training, that if the cash don't flow, the loan don't go. So that means that most lending out there is about cash flow. Like, do you have enough cash to pay back the loan? What does that look like? Where does it come from? Does it come from your personal income? Does it come from your personal taxes? Does it come from your business taxes? And how to calculate that. There's a lot of terms used like net profit, and what does that mean? If you have a loss, can you get a loan? And the answer is yes. There's a lot of myths out there that you can't. If you took a loss in the previous year, can you get a loan this year? And then you hear about EBITDA, which is earnings before interest, taxes, depreciation. So there's all these terms to figure out if you actually have enough cash flow. But you can let us help you walk through that, and the lenders. But these are the questions. Sorry, it is a little hot, Nicole, in here. Sorry. We had this issue last time. It's okay. All right, no worries. All right, so these are the questions I like to ask business owners when I'm working with them to access money or access capital. Most all of you are existing, so that's easy. Looking at the business model. So since all of you are existing business owners, to access capital, the best way to look at that is where your business currently is, where are you trying to go, and then how are you going to get there, and why are you the best person or persons, depending on how many owners you have, to run and operate and grow this business. So when you start a business, you have a business plan, but when you expand a business, since you're existing business owners, you need like a mini expansion plan, like a story as to how you're going to get to where you want to go and how you're going to grow there. and build that capacity and what this loan is going to do to help you get there, and how you're going to spend the money appropriately. That's what the lenders really just want to know. So it's important for you to have a number in mind and roughly understand what you're going to use the money for. So it's not good to go to a lender and just say, hey, I don't care what you can get me, whatever I qualify for. Just give me $1 million, $2 million, it doesn't matter. You should kind of know how much you want, what you're going to use it for, not down to the penny, but maybe down to the thousandth or 10,000s. It's really important to know what's on your credit. Does everybody have excellent credit in here? All of you have great credit. Good to go. Cool. And then your personal net worth does come into play. Business lending, a lot of people say, like, who uses business credit scores? Pretty much nobody. It's really non-existent. It doesn't really exist. But it's all really based on your personal credit. And it's all based on your personal FICO, your personal credit. And a lot of the lenders, some of the micro lenders, the non-bank lenders that you're going to hear from today, they'll tell you they don't have a minimum credit score, which just sounds like insane, right? Like kind of bonkers. But it's because of how they underwrite and look at the deal that is being presented to them, more like a story based. So I put credit story on here because it really is a story, like what happened. Usually if you don't have a credit score that's over 740, then there's something wrong with your credit score. It means that you either don't have enough or you have too much. You have some delinquencies, you have bankruptcy, short sale foreclosure, child support, alimony, whatever you have, there's something on there that makes it less than 740, so it's technically not perfect. But there are lots of lenders that will go as low as 600. So there are ways to kind of work around that story if your credit is not perfect. We went over personal net worth, and then debt to service. Can you afford the loan? Does it make sense? And then have you been turned down by a lender? So I really like to know if you've been turned down by a lender so I can work backwards, because some lenders won't lend to you if you don't have enough money in the bank, or if they don't like your industry, or they don't like gas stations or restaurants or something like that. But it's good to know. These are reasons why lenders would decline a loan. Kind of talked about it a little bit. They usually want some collateral, whether it's tangible or risk-based like SBA or state guarantee. They really like that you have credibility in the industry. So hopefully you have credibility or your business partner has credibility. And then, there's some other issues, but those are the biggest issues. So the lenders will go into this. I shouldn't act like I know what I'm talking about, what the lenders are going to talk about. I used to work for a bank, but I noticed that there are 5 C's that they talk about, but these are really the only 3 that really mean the most from my experience. And again, it's about your credit story. Do you have collateral? Are you willing to use it? Or did you go to dinner with your spouse and ask her or him if you can use the house? And cash flow is really important. You guys are all existing, so you'd use the business income. Sometimes you can use global cash flow, which would include personal income as well. And then this is the education of story versus like the score, because it doesn't really matter about the score. Because you can file bankruptcy today and have a credit score of 700 tomorrow if you just know how to manipulate the FICO and how all that works. But you won't. It'd be really hard to get a loan. But that's why the score doesn't really matter too much. And then financials, like the only way you can get a loan with a lender is if you come prepared with your financials. So since all of you are existing businesses, depending if all of you have filed your taxes or not for 2024, you still have time to, change some of the numbers, maybe show less expenses that you possibly inflated so you can show more profit, or vice versa, since you have until October to file your amendments or your extensions. But most of you are going to have to supply the last 3 years of your business taxes, depending on the lender. There's one lender out here that doesn't ask for taxes sometimes. But you're going to need the last 3 years of personal taxes, last 3 years of business taxes, obviously a personal financial statement, just show your net worth. And then since we are in the current year of 2025, you are going to need year-to-date profit and loss and balance sheet. So from January 1st to today. All right, I think that's it. And then I think I'm just going to go into some case studies. Cool. Any questions so far? Anybody want to talk about what they're trying to get financing for? No? Okay. Well, if you speak up, we can make it happen today. All right, cool. So, not yet. Okay. So these are case studies that did get approved. They're clients of mine over the last 10 years. And let's see. Oh, these people. Yeah. So this was in Davis, California. It was a young couple. They kind of did it all wrong because they quit their jobs, their $150,000 paying jobs, before they applied for a loan, and which is really hard to get a loan if you quit your job. But they had a bunch of stuff going on. They had no 401k. They lived with their parents. It was just a mess. But they had a really great credit score. Still had really great credit. So one of the options I showed earlier is if you have really good credit, but you don't have a job and you don't have a business plan and you don't have any money and blah, blah, you don't have really anything but a great credit score, you can, I know none of you would do this, but you could do what's called credit card stacking, and you could just go out there and get a bunch of credit cards and pay a company to do it, and then you just get them, run them through your point of sale machine, and then the money will go directly in your account, and then you have a 0% for 12 months, and then you go to SBA and you get it refinanced. So I know a lot of that sounds like super risky, but it's been done, and SBA will still refinance credit cards, just not merchant card advances. So hopefully none of you have merchant card advances, correct? Good. All right, you don't know what that is? No worries. All right, so this is probably pretty relevant to the area out here since it's rural. This is in Ione, and this lady, she never owned a business, but she wanted to start a feed store, and but she's been working with horses for like 30 years, and she did a lot of research before ChatGPT came out, and she like drove around town and counted all the ranches that exist in Ione, and there was something about like 500 or something like that. And then she went to the local other feed store and sat in the parking lot like a creeper and counted how many people came in each hour, and then from there figured out how many clients she would have and how many customers she would have, and then she did some tricky financing by taking a 401k and flipping it. You can take an old 401k. Does anybody have an old 401k just lying around? You do? Oh, cool. You could take an old 401k and you could flip it into a C corp, and you could transfer the money from your 401k into a C corp, and you don't have to pay any taxes. You don't have to pay it back, and it doesn't ruin anything. So it's really cool, and you can do it at any age. You could be 20, you could be 30, you could be 80. It doesn't really matter. And she didn't own a home, so they just rented. She did add her boyfriend to the business because he was making money, so that there's a secondary income to pay back the loan. So this one was super customizable. Something I learned over the years with business finance is that it is customizable. So consumer financing, if you're to go buy a car or buy a home, it's highly restricted and regulated. But for business financing, you could just make it up any day, right, Jeff? Right? Because the underwriting guidelines don't mean anything. If you have a minimum FICO score on your regulation, it doesn't matter. Because if you have a house that has 500,000 of equity in it, you're good to go, right?
No, I don't think so. But I want to ask you, case study number one. Was that one of yours? In that one, the restaurant?
With the credit cards, yeah,
You did?
I did, yeah,
Okay. And this one here?
I did that, yeah.
This one looks pretty good.
This one I did, yeah. The credit card stacking,
Yeah.
yeah.
Oh, okay.
They paid it off, and they're still in business, and they're trying to sell the business right now. They've been in business 10 years. Yeah. And then this one I did as well. There's a bank that was on one of my lists that's not here in California. They only have one branch in the U.S., and it's in Florida. It's called United Midwest Savings Bank. And they'll lend to up to $150,000 for startups and existing businesses. And if you have all your financials, they'll lend to you within 3 to 4 weeks. And it's an SBA, fully underwritten loan, 10-year loan. It's a pretty badass loan, if you ask me. And they did the loan for her for this. She had the down payment. from the 401k transfer. Yeah. And I apologize. I should have had some examples in here for existing businesses. That's my bad. This is also another startup. So if any of you are looking to pivot your company and maybe start a new trend or get into a new industry that doesn't exist, or maybe as an adjacent industry that you are currently in, so that you're pivoting your company, you can kind of use this example for that. But this I also got funded in Sacramento. These two young guys were trying to start a brand new concept that didn't exist at the time, and it's called an escape room. People know what an escape room is? Yeah. Well, since it was a brand new industry, the lenders didn't understand it, so they didn't know how to price it out. They didn't know how they would make their projections and stuff like that. So they essentially used the model of a hotel that you rent for the night, but then they just broke it up and divided it by 24 hours, because the escape room you only rent for an hour. So they kind of used a model like that. They did some other tricky stuff. And this is still in existence in Sacramento, downtown Sacramento. It's an escape room. But these were two young guys. They didn't have any business experience. They barely had anything going on, really, because one worked at a coffee shop and one was an engineer. And so we were able to use some relatable experience, because the engineer was the guy who built all the escape rooms and engineered them. So we kind of made it work, but it's kind of tricky. Yeah. Yeah. Why don't you just walk over here and just jump in this room, and I'll lock the door and I'll show you. So you go to this place and they have all these doors, and then they lock you in there for an hour. Not really. If you need to leave, you can leave, but they lock you in there, and there's all these puzzles that you have to solve and eventually get a key to get out the door. Yeah. And they're very tricky puzzles. I don't think you can figure them out, Jeff. They have nothing to do with math or lending or anything like that. Well, that is all the case studies I have. Does anybody have any questions about what they're trying to finance? No? You're going to leave it for the lenders? All right, cool. Good stuff. I think that's it. Yeah? You want me to bring the lenders up?
Yeah, why don't we go ahead and have the lenders come up, and while they're making their way, I'm going to turn this off.
Okay, so we're going to have Stephanie Ashworth from BMO. Brian is there a different person from?
Yeah, Brian's not here. Is it
Oh,
Ben?
Ben?
Come on up.
All right, so bring Ben, and then Anita Russell from Working Solutions, Jason Court from Savings Bank Mendocino, and then Myra Contreras from TMC Community Capital.
While they're making their way up here,
Thank you.
Is this on? Okay, good. I'm going to have a few people introduce themselves real quick.
I'll call on you? Okay. I will.
Stacy, do you want to say hello?
Sure. Hi, I'm Stacy Kaiko, and I'm the Business Development Manager for Economic Development and Financing Corporation in Mendocino County, but we also serve Lake.
Hello there, I'm Clarissa Hernlin. I am an SBDC advisor under the Lake County EDC for this county.
Great. So if you sign up for services, Clarissa might be one of the advisors that works with you. And then I'm going to have Gabe introduce himself. As you may have noticed in the presentation, there was a lot of conversation about having your own money. And if you can't get investors to buy into your business idea, you might talk to folks at Gabe's place to talk about how you can build on the money that you do have.
Yeah, hi. Gabe Strong, one of the owners and operators of Strong Financial Network out of Lakeport. So with the stuff that the lenders are going to go through with you guys in regards to the financing side, what we usually are able to assist with is figuring out cash flow problems. Also, after the business is already existing, which I believe everybody in here already has an existing business, we also help put together retirement plans. We do tax planning, succession planning, all of that good stuff. So anything to do with a dollar sign outside of the lending world, you can come see us for.
Thanks for being here, Gabe. What's that? Oh, yeah, I'm sorry, Chris. You're back here and I didn't see you. I just want you to introduce yourself.
Hi, folks. My name is Chris Horton. I'm your district director for the United States Small Business Administration.
Thanks, Chris. And I failed to mention earlier that everybody should have gotten a folder when you came in today. The business funding checklist and the 5 C's of credit are in there. The business funding checklist is sort of a generalized checklist that you can build a folder on over time. Most of the lenders here are going to require at least some of the things that are on this list. And if you have this put together for them to review upon application, you're like 75% of the way to getting money if you have this folder sort of built already. So you might hear people talk about how funding takes a really long time. A lot of that process is actually just compiling your information. So with that, I'm going to hand it back over to Scott. Oh, I'm sorry.
Hello? All right. Cool. Yeah, so the a myth is that it does take a really long time to get financing, but as Nicole mentioned, is if you do I didn't take it. You didn't take it, all right. If you do all the work up front, you work with SBDC, you can get financing within 30 to 90 days from the time that you apply to the time that the money gets in your bank account. If you're buying a building, it may take a little bit longer, but all right. Why don't we start with Stephanie? We'll go down. You said don't call you. Okay, so we'll start with that now. So we'll just have all the lenders introduce themselves, and then the organization that you work for, and then a little bit about your lending products.
I'm Stephanie Ashworth. Can you hear me? BMO Bank right here. I was the branch manager for 6 years, and now I'm in commercial lending. So I cover Lake, Napa, and Sonoma counties, kind of about 11 branches that I work with. Do commercial lending for clients usually in the $1 to $10 million range. So typically they're in a more of a growth cycle, looking for a building, equipment, operating line of credit. We are kind of that list where we need the 3 years in business to get some financing. But we also have partners that we work with for like equipment lending. We can outsource it a little bit. And we're a preferred lender for SBA. So we work with the SBA a lot, and we do a lot of SBA loans. That's it.
Awesome. Go to Jason.
Yeah, I'm Jason Cordy. I'm a commercial lender for Savings Bank of Mendocino County, although we do service Lake County as well. We have a branch in Lakeport as the nearest branch. My specialty is in commercial lending. Like you, I've also been a branch manager in the past. I've been about 15 years in banking now is my experience. Our products and services as a traditional bank is consumer loans. We offer your auto loans, your home loans. And then in businesses specifically, really I'm about a 500,000 up to about 10 million is our kind of lending capacity to first-time borrowers.
Good evening, everyone. My name is Mayra Contreras. I'm the Director of Partnerships with TNC Community Capital. We are a community lender, so we're serving small business owners that don't qualify through your traditional bank loan, conventional loan, or SBA product. We are a statewide lender. We can help any business that's been operating for at least a year in the state of California. A little bit more around our loan range. We're focused on what you call micro lending. That's $5,000 up to $50,000. We're also known for like a quick turnaround time. We're talking about 5 to 7 business days from getting a full loan package to funding. And have fixed rates. We're a transparent lender. We're a CDFI, Community Development Financial Institution. So we'll get into the details in a bit.
Good evening, everyone. My name is Anita Russell, and I work with Working Solutions. We are also a CDFI, which is a Community Development Financial Institution. And you're going to hear a lot of lending lingo today, but I just want to give each of you a shout out for being a small business. Like you help to fuel the economy. And for anybody to step out on a dream and not know how it'll turn out, I think takes a lot of courage. So if you haven't clapped it up for yourself, why don't you take a moment to do right now? That. Yeah, and I salute you this afternoon. We all do. Our loans start at $5,000, pretty much like TMC. We cap at $100,000, fixed interest rates. We are here for small businesses in the community. If for whatever reason you're not able to get funding through a traditional lender, CDFIs are in the community to help you. And would love to talk to you about what we do in more detail after this is all over. But thank you so much for being here today. And we're glad to be here.
I'm Ben Lopez. I'm the Senior Business Loan Officer with Redwood Credit Union. It's one of the local credit unions here. As a financial institution, just like any other bank, we do credit cards, lines of credits, and also regular auto loans. On the personal side with mortgages. On the business side, we do anything from business credit cards, lines of credits, term loans, equipment loans, all the way up to the SBA loans as well. Whatever you guys need, we're able to assist with, from checking accounts to lending, and everything in between. Like she said, we're very happy to be here, and if you need anything or have any questions, more than happy to answer them for you guys.
Thanks, Ben. All right, so we'll go ahead and start with you, Ben. Since can you just talk about maybe some of the current trends you're seeing in lending at Redwood Credit Union?
Yeah, so right now we have we've been seeing a lot of businesses coming out of COVID that are looking to expand and looking for some capital. So a lot of small businesses have been looking for lines of credits, and depending on the size of the amount of the line of credit that you're looking for will determine the package that we're going to be needing to be able to get that approved for you, right? So anything from, we've done the line of credit for up to, or as low as $500, and we've done them obviously a lot larger. The ours is broken down from, we'll say the 500 to 50,000. It's 1 year of tax returns and a application with a P&L. Then it goes up from there from 50 to 100. We need 2 tax returns, and then from 100 and above, it's like it says on the checklist here, 3 years of business tax returns and personal tax returns as well. P&L balance sheets, and literally everything on this, mostly everything on this list. But that's usually the trend, and the bigger one is just the education, not knowing the difference between business and personal credit, individuals melting them together, not knowing to separate. Other than that, just looking for capital as well. So, no.
All right, thank you. So Ben mentioned P&L, that's profit and loss statement, also known as income statement. Essentially just, it's okay. Just talks about your revenue, your expenses, and then your net profit or loss. All right, so Anita, why don't you talk about, I wasn't just saying hi. Let's talk about what you're seeing, what Working Solutions is seeing. I know you guys are super active and doing a lot of lending. So what type of loans are you currently doing? What are businesses coming to you for?
Let me start with what are we seeing. A lot of times we'll have applicants come to us at the 11th hour when there's a fire and you need a yes. And what we see typically is, and I think it's really important, that an applicant will know what they need, but they won't understand the lender's side of the table. I think that's really, really important to know what a lender is looking for in an applicant. So I think the education component is a really big thing, Scott. And we can say more, but that's something we don't often talk about. And then when there's a decline for whatever reason, the applicant doesn't understand. All they have is this wonderful story. I'm taking my grandma's cookie recipe and everybody in the family and the community loves it, so why won't you give me a loan? It's a little bit more than that. It's a lot more than that. So just, again, the education piece.
All right, thank you. And Myra, what is TMC Community Capital? I know you're also a growing microlender, so what are you seeing mostly with your clients?
Similar to Anita, we're seeing a lot of clients coming in and trying to take a loan now as kind of like their last resort. We're seeing a lot of consumer debt on credit reports. We're seeing clients that want to use the funds to refinance some of that high interest rate debt, which we can do, but we are limited to the amount on that. But yeah, same as Anita, we're seeing a lot of business owners like like under stress, I guess. Yeah.
Okay. All right. Thank you. And Chris? Or sorry, Jason.
Jason, yeah. I would say every business is different. Every owner's situation with their business is different. And post-COVID, I think the thing that impresses me the most is the resiliency of businesses. It's the resiliency of this country and the economy that continually surprises me in the face of higher interest rates. So I would say, we're seeing businesses have to reinvent themselves a little bit post-COVID and how they do business. And it's pretty remarkable, honestly, that business owners continue to innovate and change and stay successful in kind of a challenging environment that we've seen for the last 4 or 5 years. I would say the things that we're noticing is that there is a lot of rate resetting going on. We were in a low interest rate environment for so many years, and now those interest rates have really climbed up in the last several years. So a lot of loans that were made 5-10 years ago are repricing, and businesses are coming to us and saying, how can I minimize my impact on my business and still continue to do the things that I want to do or grow in the ways that we want to grow? And so partnering with the business and really trying to understand what they're doing to be successful is, I feel like, something we do to set ourselves apart.
Awesome.
Me?
Yes.
So I've been seeing an uptick in ag loans requests. I don't know if you have. I think that's an indicator of something that's going on in the market right now with our ag clients, because usually they go to their specialty lending, and so we're also seeing a lot more people buying buildings. After COVID, we backed away from doing investment property, which is where you own, like maybe a shopping center or something like that, where you're not occupying the property. The banks have backed away from that because a lot of people were working from home. There was a lot of non-occupancy. We're starting to warm up to that again a little bit, but mostly I've been seeing people looking for buildings. And we are doing a lot of SBA, because with the SBA we can do the 10% down instead of, but it depends on the property, like you mentioned. It depends on the property type. So your down payment can go up to as much as 30%. But that's been that's a real sweet spot for the bank, is when you occupy the building with your business. So.
All right, cool. All right, so we'll start with you, Stephanie, and then we'll go down again.
Okay.
All right. So can you talk about your key considerations around creditworthiness, like what you look for to see if a business owner or borrower is creditworthy, whether it be for real estate or equipment or whatever you're trying to finance? How do you tell if they're creditworthy?
Yeah, I think you covered that with the capacity to borrow, if they cash flow, their credit score, their net worth, their assets. We look at their personal financial statements to see what they have personally and their business as far as assets and liabilities. So it's a combination of the 5 C's. The credit score will tell us a story about your credit and the collateral. So it's kind of mostly what you covered already with the 5 C's.
Can you talk about a little bit in more particular with BMO, like what your minimum
BMO,
FICO score, credit score is?
680 is, I think, our minimum. Yeah.
Are you asking me?
Yeah, I am. I think our SBA can go a little bit lower than that, but 680 is right about our minimum.
Okay, cool. And then, Jason, if you talk about what Savings Bank of Mendocino uses for creditworthiness, whether it be for traditional financing or real estate, or what are you looking at?
Yeah, so again, my specialty is commercial lending. So our sort of credit criteria is a 650 credit score. But again, that story and that character is really important. That's really something that we're homing in on. if you're an existing client and there's a good reason as to why something happened to the credit, it doesn't mean that we're going to not do the deal necessarily for you. We're going to take a look at the full picture. But certainly, from the 5C's standpoint, yes, we're looking for quality candidates. We're looking for quality business owners, right? As a traditional lender and our depositor base being here in the area, we are lending with our clients' money. And so we want to invest in people that we feel are a strong investment. And so in that sense, we have a different funding source that we are going to be very traditionally risk adverse to with our money that we're lending out. So it is very important that, open communication is had between you, the borrower, and the bank, and that you are being financially transparent with us, and that we're comfortable ultimately with the deal that we're looking at.
Okay, awesome. Thank you. And then Myra, if you can go into a little bit more detail about your credit worthiness around your credit score minimum, and then what type of financials you ask for, because I know that's also a little bit different, and then maybe a couple other things that makes you unique as your lending platform.
Yeah, so we don't have a minimum credit score, minimum FICO. We do look at personal credit. Our loans are personally guaranteed, so they're guaranteed by you, the owner, and we do report to personal credit as well. So we focus on the last 2 years of payment history to I guess, review your character, your credit worthiness. And with that, we would need explanations. So if you don't know what your credit looks like now, at least your payment history, we do recommend that you get your free credit report that you have right to as a consumer per year. And if you're still not sure, I would say that, or I'd recommend that you take advantage of the resources here at Lake County and SBDC, and they can walk you through, I'm sure they have relationships with all of us. They can walk you through that loan application process and help you package your loan. So as far as the documentation, we kind of pride ourselves in creating a suite of products that are meeting our borrowers where they're at. So for example, we can underwrite up to $15,000 with just the last 3 months of bank statements. And even around that, there's flexibility around the bank statements. You mentioned that some business owners are still not separating their personal and their business financials, and we see a bunch of transfers. So we have the flexibility as a community lender to collect all your bank statements, personal, business, Venmo, Cash App, anything that will reflect revenue, we'll collect it. And for that $15,000 loan, anything above $15,000, then we just require 1-year tax return, your personal and your business. But like I said, I would definitely take advantage of the resources available to you to help you package that loan.
Okay, thank you. And Anita.
Yeah, I would say ditto to what Myra said, because we're also a CDFI. And I want to put it really simple. A bank just wants to know, or a lender, do you have capacity to pay us back? Do you have capacity? And, it doesn't matter if you come to a lender and you talk to them for an hour and a half. They're going to look at your documentation, because numbers has its own language. And the numbers are going to tell whether you have capacity to repay the loan, okay? And so that's it. Do you have capacity? And so I would say to you, before you go to a lender, there's all kind of resources, particularly the SBDC. Go to a resource, talk it out with a resource to be able to say, listen, we need funding for our business. What should I even ask for? I think it was Scott that said, you never want to go to a lender and say whatever I can get. That's a red flag. And here's the thing with red flags. You can't take them down once they're there, right? They don't go away. You can't change the color. So talk to a resource. Let them know what you want to do with your business. Have an idea what you're going to do with that money. So then you're better educated and better prepared to sit before a lender and let them know exactly what you're going to do with that funding, right? So I don't have to repeat what you said, but yeah.
Awesome. Great job. All right, Ben.
Yeah, so everyone basically said already what each individual is looking to do, and we're not much different. We have we look at what each request as what you're looking for. We look at it and determine at that point what we're going to be needing, because a credit card is going to be we are going to look at a credit card a little bit different than we're going to look at a line of credit that's $250,000, right? So what we'll be needing is a lot less of a package depending on the amount that you're looking for. With credit, we go down, we've done loans down to 600. So as Jason mentioned, every credit score has their own story. Let's say a 650 might be different between 3 different people. One might be late pays, the other one might be because they had to put their, I don't want to say child, but put me in the hospital or whatever, just to be able to pay it back, to help. So each credit score has its own stories that we want to hear. So just because the credit score is where it's at isn't going to be a no. We try really hard not to say no. We just say at this point we are unable to help, but here are the things that you need to do and to accomplish to be able to get that yes that everyone's looking for, right? So listen to the story, having the correct financial documents in place to be able to show that you're able to support the debt that you're requesting, right? And having the reason what's needed behind it. Just because somebody wants $1 million doesn't mean that that's the best thing for them at that point in time. So we just like to hear the full story, but like I said, tax returns, profit and loss statements or income statements, balance sheets, those are the standard things that most of us are going to be requiring anyway. Just having those available and readily available when asked would be a big...
Like same day, right? Like when they walk in, you want all their financials same day.
I mean,
like that'd be amazing, right? Yeah, and save a lot of time.
They would.
Yeah.
Definitely would.
What Nicole passed out is gold. So just check all those boxes, bring all your paperwork in, and then apply, and then, like what Myra said, 5 to 7 days in your bank. Done. Sounds fun? All right, what questions does the audience have? Yes, sir.
I'm trying to buy a local resort. It's been around since the early 50s, and I've been there as general manager for 2 years. Then I went somewhere else as a general manager for a hotel, and I came back now the same resort as operations director of operations. The owner wants to sell it to me. It's almost 5.9 million. And so my question to you is, what do the banks look for as experience? Now, I've been a business owner since 1999 on family entertainment. But what do banks look for as far as buying something like this, the experience?
All right, so we can go down the panel, or you can start, Jason.
Yeah, I was just going to say you nailed it. I mean, management experience, directly running the entity. That's something that we're looking for. Mm-hmm. We want to know that you have the experience and the wherewithal to run the business. And if you've been a high-level manager in that operation, that would speak to that. Plus, your experience with running other businesses would just further solidify our comfort level with working with you on some sort of transaction like that.
And the owner is even willing to carry $2 million on a second. Mm-hmm. So that says a lot that she's willing to.
That does.
Are you guys still doing a lot of hospitality?
I'm gonna tag onto that question because I know what happened in the last session. What if he wanted to change the name of the business, dissolve that LLC, and create his own LLC? What would happen?
Yeah, go.
Yeah, I mean, even if you want to change the name of the business, now I don't know exactly what business that we're talking about right offhand, but that's a possibility. I mean, again, we're assuming that you're not changing the nature of what the business is, you're just simply changing the name, and so that's something that we could entertain.
Hey, Chris, can you still buy a partial business? Can SBA still parse out, like, if a business wants to sell and the owner wants to stay on 20% and they want to sell 80, you can still do that, right? So the seller wants to they could do a seller carry, but you can also break up the ownership. So say the owner wants to stay on for a couple of years, you could buy a part of the company. Because that's a new thing with SBA 7A. You used to not be able to do that.
So that's interesting because in the last session, that was sort of a problem because the previous tax returns would have the old LLC on it. So, you know,
The best thing is to get in front of it and do an acquisition. You do it, and SBA is really good at that.
Right.
Do an acquisition loan, and then you can change the name.
This resort, it comes with property and a building or something, correct?
It's,
Yeah.
well, it's been around. It's Skylark Shores Resort.
Mm.
Yeah, so it's been around for many years. So it's got, a lot of buildings.
Mhm.
About like 4 or 5 acres.
Yeah. All right, cool. You have a question, Jeff?
So,
I need you on my. We're gonna get you on record.
Do you guys still do a lot of hospitality?
so he could keep the name for recognition if you want to, right?
I would keep it.
I'm just
Yeah,
I
keep-
was
keep the name.
saying
Yeah,
that.
I mean, it makes sense to keep, well, yeah, Nicole
I
just
was
wanted to
giving a
throw, yeah, you know.
hypothetical. No, because
No,
in the
yeah.
last session, we had this conversation where someone bought a business, dissolved the LLC, and started their own, and it sort of jeopardized funding in the future because
It was a startup.
it became a startup rather
Yeah.
than an established business. So that's the sort of thing I was
Yes,
trying to
yeah,
get
yeah,
to.
yeah.
Yeah.
That was
Jeff
an
doesn't
issue.
want you to change the name.
Yeah.
Don't change the name.
Another question though.
Yeah.
Because I would like to keep the names, but it's also, that's the DBA, the Royalty Hotels is the parent
Yes.
company. And then DBA, Skylark Shores Resort. I don't know if I want to buy the Royalty Hotels Inc. because of like, it's liability. So I'd want to have my own corporation, DBA Skylark Shores Resort.
Mm.
But would that affect things if I didn't buy that corporation?
No, it wouldn't affect things if you didn't buy that, no. You could parse it out. I mean, he or she who owns it would probably on their legal side take out the DBA that has that name, and then you would have that. But that's something that a CPA or an attorney would do. You have a comment?
More of a question running off of succession. You know, we have a lot of clients that obviously retire and then try to figure out how to sell their business and all that good stuff. So my question's more along the lines of, do you guys have any resources in helping consult on the sale of a business or a business owner to business buyer kind of relationship? And do you have a
I'm assuming you do.
No.
Oh, you don't?
Oh, you don't.
I thought you were
There's a few people
doing a
that
call
do
out for
business
yourself.
Consulting, but
Yeah.
it's hard.
We-
It's hard to find.
We do have it at the SBDC
Yeah.
as a specialty, expertise that we could reach out to, that Nicole can get access to.
We actually have had a couple of clients who have used the SBDC succession planning advisor in order to sell. And usually what happens is we try to get that advisor in early so that there's a little bit of planning, because the time that you want to retire and buy an RV and leave, you're probably about 3 to 5 years out from having a business that's ready to be, handed off to someone. You have to do some work to get it ready to hand off to a person who doesn't have the historical memory of all the things that have happened. So packaging it up, it takes a little bit of time. I also wanted to mention, because a couple of you talk about the credit story, we actually have an advisor who works with businesses at various stages of ownership that will help you repair your credit and sort of, you can't go back in time, but there are things that you can do to make it better. So if you're interested in that, we have someone for that. I'll give it back to Scott.
Okay. Did you have other questions about this purchase or
No.
No. That's really cool. They might do a seller carry of $2 million because on a $6 million purchase like that, you'd have to put 10% down, which would be $600,000. But if they and no bank's going to give you 100% financing because $600,000 is obviously less than $2 million, right? So it would almost make it look like to you that you wouldn't have to come to the table with anything, but that's not the case. Most lenders are going to want to negotiate some sort of skin in the game on your part, and it may not be the full 10 if the seller is going to do a carry. And that's why I personally love business financing, because it's customizable regardless of what Jeff says, because you can just make it up like any day you want. Like it's all negotiable, which is awesome. Especially with the $2 million seller carry, that's 30% down on a $6 million property. That never happens. So good for you. Yeah. Other questions around real estate purchases or? Yes, sir.
Here, Dirk, let me get you a.
We've been in the real estate business for, is it working?
Yeah.
Yes.
We can hear you.
We own about 15,000 square feet in the town, but we have a client here or somebody that wants to expand into Clear Lake, and he's unable to come down to, not qualify for a SBA loan. So we have two other partners that put in probably about roughly 30% of the purchase price of the building. Obviously, it's an existing business that wants to move into town. Who should I talk to, and what are the interest rates, and what are the terms?
Who owns the building that you're trying to get
We're
into?
buying the building.
You're buying the building.
You along with the other individual or the other business?
Yes.
Okay.
So there's three partners that will own the building,
Mm-hmm.
and one of the partners will run the restaurant there,
Okay.
How much of the building will the restaurant occupy? The whole thing?
the whole thing.
And did you say one person is not able to qualify for an SBA loan?
The gentleman that's going to run the restaurant,
He does not qualify for an SBA
No.
loan.
How do you know that?
because he applied already.
I know, but that doesn't mean anything. Did he?
We're
like,
we're
so,
trying-
so
we're
the
trying to
question is,
help.
so there's a couple reasons why you wouldn't get approved for an SBA loan. Either you defaulted on student loan, like federal debt.
don't know.
Oh, that person's not here. Okay. Well, I'm just
Oh.
telling you, there's only like 2 or 3 reasons. Like they committed a felony and they lied about it, or they went delinquent on a student loan or some other federal debt.
Not a resident.
That could be not a resident. But the thing is that anybody under 20% ownership doesn't necessarily have to sign on the loan, correct?
Correct.
So if you can change the ownership structure and it wouldn't matter, that person that's running the restaurant could have 15% ownership or 18%. You can change the ownership structure and they wouldn't have to be on the loan. So it wouldn't really matter per se of what you're talking about.
Okay, maybe I should talk to somebody individually about this particular case.
Yeah, you have like the best like question where lenders want to say it really just depends. It's like their favorite thing to say. They get so excited about it.
I know that. I think we have some loans with Mendocino Savings too. So.
Yeah, I was just going to say that if you're willing to personally guarantee the loan and you're helping this person and you're going to be a part of the entity that's going to run the business or own the building, then that we would look at as a partnership. And as long as you're willing to personally guarantee, again, we're going to look at the credit capacity of those 3 individuals.
Okay.
But that would be something we could take a look at doing with you.
And what kind of rate for the building was you looking at, Ryan?
Again, it really does depend, and I know that's
It always
a terrible
depends.
answer
Give
to
me a
give you,
range,
but
man.
the loan to value of the building, and the industry that is, so it's, you said
Probably
restaurant.
about 60% loan to value.
I would say 6.5 to 7 1/4, somewhere in that range.
Sounds good. We'll come talk to you.
How much is the building?
Building is about 250.
Okay.
Which building is it?
250,000?
Yeah.
Oh, anybody would do that deal.
Okay, thank you.
Yeah. Anybody else? Any other questions? All right. I guess we'll network.
Great.
Have.
Yeah,
Dude,
let's
yeah,
go
go
ahead and close it. Thank you. I wanted to take a couple thank yous, especially to BMO for opening their branch today and letting us. It looks like even the local police department came to check to make
They
sure everything
did?
was okay. We've officially
It's probably Scott.
set the alarms off. Thank you so much for being here. We do have snacks. Please stick around and network and make some deals. So thank you so much.
Thank you.
Thank you.
Yeah.
Somebody get the name.